Happy weekend, everyone. Tim Knight here after a rather harrowing week in the wonderful world of the markets. Kind of bummed out because of today. You'll see why if it's not too obvious already, and kind of walk through this craziness. We had for the last portion of November had this nice steady trend downward. I mean, in retrospect, this is such a beautiful thing. And Thanksgiving was when it all ended, just after. And we have done a number of things since then. We had our initial lurch higher here and the gigantic central bank dollar swap surge here that constituted the lion's share of the rise. And kind of we're drifting higher, and we're starting to poop out, I had thought, because as you can see here, the progressive highs got less dramatic and started to sink down into what would have been a really nice inverted saucer pattern here. You can see the points quite clearly. So look how much, much higher, much higher, not so high, not so high, not so high, and then actually started to kind of sink with this one funny little spike here from the jobs report. And after that, kind of the revelation that the Euro Summit wasn't going to yield anything amazing, things just fell real hard yesterday. And then zooming in closer, we can see that even after the close yesterday, things started to push higher, and then we had another nice jolt down. And as of late last night, it looked like a really cool day coming on the horizon. And from that point, we rallied, 30 plus points on the ES? Based on what I'm still not clear. There wasn't any big announcement. I mean, the summit ended. Croatia was added to the list of countries in the Eurozone. It wasn't like one of these things where there was some clear announcement and big news. I just don't know what happened. I will say that what I had been really hoping for was something along these lines. If we draw this horizontal line, what I had been anticipating was a falling away from this topping formation. And what happened instead was a very resolute penetration of that, and we are now back into the thick of this trading range between about 1240 and 1260 or so. Today was strong basically all day long, and my current mix is, if memory serves, something like 30% long, which is all in a single instrument, the Diamonds, DIA. Because if anything is going to go up, I have the most faith in DIA. It may not be the most dynamic of them. IWM sometimes plays that purpose, but it's the one that I am putting my money behind if we push higher. And then, as usual, a huge smattering of shorts, none of which are large. So again, I'm about 70% committed overall, with about a 30-70 bull-bear split, and just not real happy about the week at all. It really ended on a very sour note for me. I'll also note here, let's pull up another chart before we go on. I've received a number of emails from folks basically giving up. It's been really surprising to me, both in the comments and with private messages, about people just really throwing in the towel. And it's not just perma-bears who are sick of waiting the market to go down. It's just traders in general who can't deal with being jerked around every 5 hours. I can understand their point of view. This is a torturous market. I've really never seen anything like it. In spite of all the dynamism that we just saw there with the ES, the Euro's actually been kind of in a steady state. If you kind of ignore these crazy spikes up and down, we've been at around 1.34 for a couple of months. I mean, yes, there's aboves and belows, but by and large, we've been at about 134, for a couple of months. I stopped trading Forex years ago because the 100x leverage will nuke up an account with moves like this if you're on the wrong side of it. But we had been seeing a steady degradation, and that really stopped, not surprisingly, also around Thanksgiving. One thing that I was interested to see was the sheer effect of the euro on the ES seems to have kind of changed tone. There's very little data on the ES back here, so I'll zoom in a bit. As you can see, for November, they were virtually one and the same. I mean, in particular, look here. It's incredible how they just move in virtual lockstep. And this central bank dollar swap thing really changed the picture. Not only, well, it's really just one thing. The ES basically is, when the euro is a little bit strong, the ES is really strong. That's what I'm seeing. Because the euro today was up just 0.3%. Whereas the Russell was up like 3%. It was up 10 times as much. So my point is that even though the euro has been kind of steadily descending, as you can see here, the ES has been much more stable, and any whiff of strength from the euro, no matter how small, translates into a tremendous amount of strength on the ES. So to my way of thinking, not such great news again on the equity bear side. One other Forex I've been watching besides the euro is the more exotic New Zealand dollar, NZD/USD. This had the makings, again, of a really powerful move to the downside. That's been somewhat mitigated. We had, especially here, fallen very sharply and very quickly lower. But to my way of thinking, the New Zealand dollar is actually a better harbinger of big turns than even the euro. We've seen it here, and I hope we're continuing to see it here, although getting to that break is agonizing, really. Looking at the larger picture here on the ES, we are threatening to break above resistance there. I think if we break above the highs of this Thursday, the bulls are going to have a pretty swift run into the low 1300s. As far as the NQ, likewise, if we get above, I would say 2340, that will really power the bulls higher. And conversely, as far as bonds go, breaking beneath this trend line, which will not take much at all at this point, would also throw more weight behind the equity bull/bond bear argument. One item that got surprisingly weak late in the session today was gold. I mean, at the end of the day, it was up. It was almost unchanged. And on a day when the Russell's up 3% and the Euro's up 0.3%, having this up 0.09% is pathetic. Breaking beneath Thursday's low on this one, I think could get ugly in a big hurry for precious metals. Let's take a look, just to wrap things up, at a few key indexes here. XBD, the broker-dealer index, until such time as this guy gets not only above 88.52, but even more so 90.89, any sustained bull run is going to be cut short. If we do get above those levels, I think the path back to triple digits here isn't hard to foresee. I don't, believe it or not, I actually don't have any strong bullish or bearish feelings about the market in general. We seem to be, I wouldn't be surprised at all if the rest of this month was just dickering about in a fairly tight trading range. I think everyone's kind of exhausted, and I don't think there's any real guides as far as what should be guiding the market higher or lower. Keep in mind on Tuesday, FOMC announcement. We'll see if that provides sauce for either bulls or the bears in either direction. Let's wrap up with a couple more here because I'm pooped when I wrap this week up. Here's the S&P. This one needed to get above 1267 to, it's kind of an inverted head and shoulders here, and it would also push us above this this resistance trend line, and that would pave the way, I think, for probably as high as 1325 or so, the underside of this fan line. And last one is the big old Dow Jones Industrial Average, which, as I said earlier, I'm long this as a hedge. And the key here is the 12,284 level on the Indu. We've got a very substantial resistance line right there. So this thing butting up against 12.6 or so wouldn't be at all a surprise. But had today been weak, had today closed lower, I think that the bear case would be stronger than ever right now. As it is now, you know, minus 200 yesterday, plus, what was today? Plus, plus nearly 200 today, basically a wash. Yesterday and today kind of like canceled each other out. I just think there's frustration all over the map. And I'm less confident about declaring either direction at this point. I'm happy to kind of bide my time in December and let the clock run out and just kind of try to keep risk low in the meantime. So let's enjoy a couple of mornings without worrying about the markets. Have a good weekend, everybody. Good night.